get me? Take care, take care, take care.
Welcome to Looking at the Markets with David Modell. Today we're going to look at Bollinger Bands, but specifically at Bollinger Band width. And by that I mean how wide, how far apart are the upper and lower Bollinger Bands. All right, so let's take a look at that, and we're going to go on stockcharts.com. I want to give them credit for all these charts, okay? And right now we're looking at the daily candlestick chart for COP, ConocoPhillips, all right? So each of these candlesticks represents 1 day of price action. And below it, I've got the BB width. That's the Bollinger Band width. And it's on the standard settings on stockcharts.com. And to show you how to get it, you go down, if you're on stockcharts.com, and under indicators, you go to Bollinger Band width and just leave it on 20 and 2. Which is, 20 is the look back period and 2 is how many standard deviations. It's the same as when you put on the Bollinger Bands, all right, the same parameters, same standard default parameters. All right, so I'm on ConocoPhillips as an example. Notice that I did not put the actual Bollinger Bands on the chart. Why not? Well, because I don't want to be distracted. If you want to use the width, okay, you can put the Bollinger Bands on separately than the width. Okay, the width is down here. And this indicator tells how wide the Bollinger Bands are. If the upper and lower bands are very wide apart, then you see it go to the top here. Okay, if the Bollinger Bands are narrow or close together, then it goes way, way down. Okay, and usually it's somewhere in the middle. All right, and when it gets near, let's say above 15, closer to 20, that's wide, that's very wide. And then when it's at or below 5, that could be considered narrow Bollinger Bands, especially if it's below 5. But when it gets toward 5, that's when you know that they're narrow. Now you can put the Bollinger Bands on there, but if you start looking at the bands, instead of using the width indicator on its own, then you're going to start interpreting. You're going to start putting your interpretation onto whether the bands are narrow or wide. And you might look at bands that are not particularly narrow, and you might, just because you're being impatient, you might say, well, they're narrow enough. Or if you're waiting for them to get really wide, you might get impatient and you might say, well, they're wide enough. All right. Whereas if you take the Bollinger Bands out of the equation, off of your chart, and just put on the width indicator, there's no lying here. There's no deception. The numbers don't lie. The charts don't lie. And you can wait more patiently, especially if you're waiting for the Bollinger Bands to get really narrow. All right. So, before, let's say you want to put on you want to buy a straddle, or you want to buy a strangle, okay? Because when the implied volatility, the IV of options, gets really small and the Bollinger Bands are really narrow, okay, so there's not much volatility there, and when it gets like that, when the Bollinger Bands get really close together or narrow, you might expect a breakout to happen fairly soon, and you might expect an IV or implied volatility expansion to hopefully happen soon. That's pretty typical. It's not guaranteed, but it happens often, all right? And so if you want to buy a straddle or a strangle, that might be a good time to do it. And so you might want to wait until the Bollinger Bands are really close together. In other words, you want to wait until the width is really low, like 5 or below 5 on this chart, all right, on the standard settings here. And look what happened. If you waited until the width indicator got really, really low, like it's below 5 here for ConocoPhillips, okay, so you might have bought a straddle or strangle here, and then you're hoping for a big move so you can gain, you can profit from the implied volatility expansion and from the big price movement, which you need if you want to profit from buying a straddle or strangle. Look what happened. Big move afterwards, okay? So, the Bollinger Bands get really narrow, and then the big move can happen afterwards. All right, let's look at some other examples. Here's Apple, the daily chart. And if this is 5, you can see it was around 5 a few times, but it went below 5 here, okay, like really low. And then if you had bought a straddle or strangle here, you would have done probably pretty well because boom, big move to the downside. Notice that big moves are not always, as we saw in ConocoPhillips, we saw a big move to the upside. It could also be to the downside. And if you buy a straddle or strangle beforehand, you can profit from a big move up or a big move down. Here it is again, okay, it's below 5, and look at that. If you had bought a straddle or strangle here, you would have done really well. I mean, that's a big, big extended move. All right, let's look at lows, and we can see, take a look, the Bollinger Band width got really low here, like down to 2.5, my goodness. And if you had bought a straddle or strangle here, or even if you bought it when it was a little bit below 5 here, even if you bought it back here, if you had just been a little patient, waited a few days, you would have had the nice big, look how far down this went intraday on this candle here. You would have had a nice profit on your straddle or probably as your strangle as well, okay? And here's Tesla, all right? As we can see down here, look how low it went down here. It went kind of low here, but it really went closer to 5 around here. And if you had bought a straddle or strangle here, you probably would have done quite well from this really extended down move. All right. Again, the big moves can be way up or way down. And if you're playing a straddle or strangle, a long position for a volatility expansion, then a big down move can really benefit you, as can a big up move as well. All right. And so again, taking the Bollinger Bands just temporarily doesn't mean you have to keep them off your chart all the time, but just take them off perhaps and just look at the width as a separate indicator, and that way you're not putting your interpretation on how wide or narrow it is. You can just see in that single line there, and so you can be more objective and less interpretive. And I encourage many people to be more mechanical with their trading and putting less interpretation on it, because oftentimes when it comes to technical trading, putting your interpretation into things really just means putting your biases into it, or your impatience or your expectations or your hopes. And hope is not really a strategy, as they say. All right. Okay, so that's Bollinger Band width. Maybe something you've never used before, never really considered, or never used it in the way I just explained it. So if you'd like more help with this, with technical indicators, or you'd like help putting together a trading or investing plan, I can certainly assist you. You can email me at any time. My name is David Modell. My email address is davidmodell@gmail.com. Thank you so much. I really appreciate it. I hope you'll give this video a thumbs up on YouTube, leave a comment, and subscribe to my YouTube channel. Thanks a lot. I really appreciate it, and I'll talk to you again soon.
Yeah, mate. Take it, take it, take it. They're gonna take it off me. Take it, take it. They're gonna take it off me. Take it, take it.